Alright, welcome traders. So today is going to be a good lesson, necessary lesson, rather quite boring, but this is what I believe makes a trader great and breeds longevity in the trader's career. So let's get into today and see what happened. And yeah, so this is the dollar, of course, and of course we've been calling dollar higher ever since it took out its liquidity, and dollar's been going higher since then. I do believe that we are eventually going to take this out. Are we going to do this week? I don't know. I want you to notice how we hit this level right here on the weekly level, which is a weekly order block. Same level right here. And this right here is just a rejection block. So these candles bodies. Right, if you look on the weekly again, the body of that candle. So this is a rejection block. Weekly order block. Alright, let's go to the 4 hour. Of course, all we've done so far, remember, we took out this liquidity, ran lower, took out liquidity, traded higher, created a daily order block, and we notice how we bounce off that level, we start pushing higher into a weekly order block, bearish order block. So we're going 4 hour time frame. Price have been moving smoothly so far. And 1 hour time frame, same thing. We just had price shoot up higher. And since we could order block and just know it's a consolidation after that. So am I expecting dollars to go higher? Yes. But I'm not going to force trade, and I'm going to get into why that's the case. Let's go into pound real quick. Pound looks like it's going to take out this low. Will it do it tomorrow? I don't know. It's NFP, so you have to stay clear. You have to make sure you're paying attention to the economic calendar. I'm not just going to trade price without understanding the economic calendar and the day of the week. All those stuff play a role. One of the most important things you can focus on is time. What is time of the day? Day of the week. And of course, it's about to be Friday. And looking at the calendar, it's NFP week. NFP is always volatile. Market can literally switch sides. But in this case, I do believe we will remain bearish. But that just brings the question: is are we going to take out this low this week? And I'm not necessarily a fan of that. If I do see price that supports it, of course I will enter the trade, but I'm not a fan of that happening this week. Anything can happen, but we'll see. This low looks good to take out. Um, and notice, by the way, this is a 4 hour fair value gap. And I also want you to pay attention to see. Oh yeah. So this is a low, my bad. This is the low I'm looking at. All I've done so far is trade into this order block and drop. This low looks like it's ready to be taken out eventually. Maybe tomorrow, maybe next week. I don't know. But notice how we filled in that 4 hour fair value gap to the T, and look how beautiful price just stayed around that level. That shows you how price, in my opinion, is very controlled. There's no reason for the market to just fill in this void and then just stay right there beautifully. The bodies didn't even break below. And yeah, let's go to daily dividers. So nothing really much here that excites me, honestly speaking. Today's price action was very um, went straight to the point right when London session opened up. Straight to the point. Just dropped. S&P right here. What's on S&P? So I want you to notice S&P. We have this level right here. This dotted line is the midpoint between these two down close candles. So that's a sensitive level. So the midpoint of order blocks are also a level of sensitivity. So that's why I outlined that level right here. These last two down close candles, the midpoint is right here. And 4 hour, you can see it's a fair value gap in here. 1 hour, what do we have? Yeah, surprise just ran straight into that level. And those are traded off this breaker right here. So here goes that breaker again. I'm just gonna use this candle in this case, but so beautiful trade off the breaker. Straight to business. Trade in there and then just straight drops. Um, Smooth moving. I got in a couple of trades here, and I want to talk about that. This brings me to um, our conversation for today, and what I do believe breeds a great trader. What keeps your equity curve on top? You know, what avoids those little swings in your equity curve that hurts? You know, how you have a high. Let's just say you won 2 days in a row, 3 days in a row, and you're feeling yourself. Now you think it's time to over leverage or even go harder. Then you start taking these losses, and the market becomes choppy. And you're wondering why. We've all been there, where you had a equity high, and out of nowhere you start taking losses on losses. Then after each loss, guess what you're trying to do? You're trying to gain it back. Another loss, try to gain it back, and then you just keep on losing more to the point that you wipe out all you've done for the week. You know, we all can say amen to that because I've been there. You've more than likely been there, where all the work you've done for the week, even maybe the month, just gets wiped away in one day. And this is one of the things I'm dealing with right now, and one of my flaws at for the not even flaws, just one of the things I've recognized that I need to work on, and I've started working on. So I want you to pay attention to how much the market has dropped, and I want you to understand this. One, it's NFP week. Okay. Two, look at how much since the week started. We open here Monday, Tuesday. Look at this drop. Boom, boom. Now this area in here, this New York session I want to talk about. We dropped heavily with a mentality that one is Thursday, and two, tomorrow's NFP. So notice New York session, in this case, let's go 8:30 opening. 8:30 open, right? We're just gonna go with that. Where are we at 8:30? We're here. So the market has already dropped from London. It already dropped from yesterday, and we're right in the 4 hour level, daily level. We're about to hit that level. So there's not that much room for the market to keep on pushing. The thing is, as a trader, sometimes once you have your bias correct and it's playing out, sometimes we might just tend to expect the market to keep on going that in that direction. But you have to be paying attention to what levels are you hitting. Are you hitting a day? Are you about to hit a daily level? Are you about to hit a 4 hour level? Right? If the market is in those areas, you need to avoid forcing the trade. See, you're forcing the trade whenever these markets are at these higher time frame levels, expecting it to just ignore those levels and keep going in that direction. Most of the time, majority of the time, that's not what is going to happen. Now, can the market just keep flushing? Yes, but majority of the time, it won't do that. Majority of the time, when it gets to these higher time frame levels, especially if it's already been dropping, right? It's one thing if it dropped, went higher. You see what I'm saying? Then you can expect to sell into this level. But we're already dropping into New York session, into this higher time frame levels. So there's no retracement. I don't like that. It's sometimes still battling because I'm like, okay, I'm still going to try to take a trade. But reality is, when the market's already at these higher time frame levels, it's traded lower into these levels. You're bearish, but it's already been dropping lower. You don't want to. So, let me phrase it this way. Number one, we've been dropping, right? So we're dropping into New York session. Number two, it's near a higher time frame level. Number three, it's not time to execute. You just wait. Sit on your hands. Don't do nothing because the trade is not just going to play us. It's going to be a rougher trade. You cannot ignore these levels. 4-hour fair value gaps, daily order blocks. Even if you're bearish, you need to anticipate a bounce first, if anything. And that's what we had here. And I tried to take the bounce. Actually, I was actually in some buys. And honestly speaking, it messed up some of the equity I gained yesterday. You can see I was at 117. Now I'm at 114,000. And these are the days that messed me up. So I've learned, but there's a lot of back and forth you will see right here. Today's the third, right? Yeah, the third. So you see, first trade, it was I lost this trade, in pound, lost on the euro. So all these losses, why? Because I was trying to short the market when I try to buy and I try to short. Pretty much, once the market hits these high time frame levels, you want to take it as, okay, it's either going to take a pause, it's either going to consolidate, or it's going to reverse. You can't ignore that. And at these levels, if you are still stubborn to take a trade, you want to reduce your risk. Cut it to a quarter or even in half, something like that. And that's what I'm doing now. So, because a lot of times, yeah, the setup might pop up, and I'm going to show you pound, GBP, where the setup popped up. It will pop up, but the point is you're already at these high time frame levels. It's not that much room for the trade to go because these levels, these 4-hour fair value gaps, order blocks, daily order blocks, all those high time levels can serve as a bump in price. It can stop price and slow price down from going to its objectives. Especially it's already Thursday. Tomorrow's about to be Friday. Thursday, Friday are days that can breed a reversal or a retracement. So having all those things in the back of your head, understand Thursday, Friday, first and foremost, can breed retracements or reversals. Then start of New York session already in a 4-hour level or a daily level is not likely to keep going lower. It's probably going to bounce. So if you're still stubborn and trying to take those trades, my advice would be don't take the trades, number one, because we already got the meat of the move. If you look at what happened yesterday, we already caught all of this. So, yes, it dropped straight from London's session, but we already caught the meat of the move. So either you stay out the way. If you're going to reverse, take a counter trend, reduce your risk. Reduce your risk. This is very important. This is something you shouldn't ignore. I battled this personally. You can see all the trades I took in here, just trying to get something back, close the trade out because I'm like, oh, it's not going good. You get a little confused when you start, once it gets to these levels that are, you expected to go to. So the level I already expected the price to go to, but when it gets there, you need to dial back. You need to get out of the market, or you need to dial back heavily because that will make your equity curve drop. I was at 16,000, I believe. Now we at 114, so, or 113, whatever you want to call it. 3% gone. It's not a lot because I kind of controlled it, but these are the days where I usually mess up. I already know where it's going to go. It gets there, then what do I do next? Still try to force it? No. Stay out of the way. Now, can it drop tomorrow? If for me to take a sell, I'd rather see this market go higher first. Remember, this is a game of chess. Be smart. If the market's already dropping lower, everyone's going to want to sell. If it's going higher first and you're bearish, then you want to expect that sell to pop up. You want to look for that break. You want to look for the break of structure. Then you hop in the market because they've already they've already made a lot of traders go one way and then you go the other way with the smart money. So that's the mentality. When the market is dropping and you're already bearish, chances are they're gonna come in. They're going to knock out some people. Everyone's not going to win. They don't want everyone just riding this wave down. And look how clean this level is here. So I don't know what's going to happen tomorrow's NFP, so I'm not going to sit here and predict anything. I'm still bearish on this. Only thing that will make me sell, if at all, and my risk will be dialed back, is if we start trading higher, and then we see a break of structure, then I'll take a sell. But I'm not really too excited about the market. And another example is here, the GBP. So do we have a breaker entry? Yes. But if you look at dollar was not doing nothing like this. Pound was in his own world with all this price action. It straight dropped. This is our breaker right here. Last down close candle for its up move. Took out its liquidity. Market goes back in this level. You can take that for a sell. I didn't take it because I like to see symmetry in the markets. Dollar was not showing the opposite of this, so I didn't take it. And mind you, where are we at with 4-hour fair value gap? And what have we done from London? We just straight dropped. So I don't like that. So these are times where I should avoid the market. And these are times that usually will mess me up. I mean, mess me up a little bit today. 3% loss. But at the same time, I dialed it back. Now you can only imagine if I didn't dial it back, I'll probably lose 6%, 10% one day because I know that market is bearish, but I'm trying to ignore these 4-hour levels. You have to respect them. Respect the market, especially ready to cut me of the move. So I think that's why I want to just drop here today, just mentally wise. I get it, but look at all this drop, right? It dropped hard. So mentally wise, it's ready to hit your targets, hit your levels. Can it drop lower? Yes. But don't force the market. Live to trade another day. These setups reoccur every single day. The mean of the market has already played out. NFP should not be traded really this week. If I do take a trade at all, it'll be very light risk, just because I'm maybe trying to catch a breaker entry so I can put it on my channel. That's about it. But I'm not really going to press any button hard on this pair or any pair, even though I do see this low being a target. It might just do that next week. So I'm keeping all these things in mind. It's Thursday. Tomorrow's Friday. The market could just save this for next week, and that would be a beautiful thing. Start trading higher. And what do? We expect sometime next week for it to start dropping lower and take this out. So the goal is you want to do the opposite of what the market's doing. The market is straight dropping into a session. Don't sell. Wait for it to start trading higher first, and then you can look for the sell. Opposite said, if you're trying to buy the market, if the market is already just going up and up and up and up into the New York session, I'm not interested in just taking the buy. I'll wait for it to maybe like knock some people out, drop lower aggressively, then give me a break of structure on a lower time frame, and I'll hop in. So I hope that was insightful, but that's a very important game, man. That will help you with your equity curve, help you with not losing your mind, because a lot of times that's what happens with traders. There's a dollar right here, straight higher, weekly order block, just dance around here after that. So if you have all these levels in mind, you could expect and anticipate where the market might just slow down. So hope you have a wonderful day. Thank you for watching this video. If you stayed to the end, thank you. I hope you have a great day.